Hi, Cheryl. How are you?
Hi, good morning. I'm doing well. How about you?
I'm doing great. Thank you for asking. I'm very, very excited about our second call today. We're going to be, talking about I I have the interest of buying a house. What's the difference between getting pre-approved and getting pre-qual? But before I jump into that, I do want to share with everybody that if you missed the first call, you should certainly go and see it. We talked about, the basic stuff, how do I get my credit score ready? What do I need to get a loan? But let's talk about that. Getting pre-approved, getting pre-qualified, what's the difference?
Yes, so the difference is when you tell me what your numbers are or put them in an application, that's one thing. But to actually see your pay stubs and see your assets, how much you have in your bank account or where you're pulling that money from to purchase a house, that's the difference between a pre-approval and a pre-qualification.
Okay, awesome. And now let's talk about, okay, I found the house. I submitted an offer. I've already negotiated all the terms, the price, everything. What do we do next as far as your side? Because, me as a realtor, obviously we have the inspection, but on your side, what's next?
So the very next step, so you've found a home you love, you've made an offer, and you've only been pre-qualified so far. So all I've known is all I see is the numbers that you've given me. So the very next step is to gather your documents. The documents that I will need, we talked about on the last interview, but that's going to be things like your driver's license. We also need to see pay stubs from the last 30 days. We also need to see 2 months of bank statements and all pages, whether they're blank on purpose or not, because a lot of times there's a page that people don't send us, and we always have to get that blank page because the banks leave it blank intentionally. But we'll need to get that. We'll need to see the W-2s, predominantly from the most recent year, but possibly from the previous year as well. So make sure you gather those. If you're self-employed, we're going to have to see 2 years of tax returns, and we'll likely have to see your P&L year-to-date so far this year. So those are very important documents. We really can't even give you a pre-qualification until we see those if you're self-employed, because we have to see what your numbers look like. And then we'll also need to see any other assets, such as like if you have a 401k retirement savings plan or a 403b. We'll need to see that, because even though we may not be using that money for your down payment, we may need to use that as reserve. Sometimes the file, if it's a little bit tight on the numbers, then the file looks for some reserves. And also, let me bring up the point that what we can do is we can run it through what's called an automated underwriting system. So maybe you've given me all your documents, and I can run it through a file before it ever even goes to an underwriter, to make sure that I have a good file, and when I submit it to the underwriter, that everything's in order, all the numbers make sense, and that we get an approval.
Okay. So basically, and just to make sure that everybody understands this, so we submitted the offer, and normally we have 30 days till closing, but really, how long should we, expect to have all those documents ready? How much, we want to have those documents ready 1 week prior to closing? Usually, what do you see?
Okay. So I think I understand your question, but it's very, very important once you get under contract, if you haven't already given me all those documents I just talked about, you have to get those to me as quickly as possible. And the next step is you have to e-sign the documents, the disclosures that we sent you. It's very important that on the front end, you do these things very quickly, or you could slow down the whole process. So for instance, if we need to order your appraisal and you've not e-signed and paid for your appraisal, that's going to slow it down. When you go under contract, you actually have a financial contingency date and an appraisal contingency date. Those dates might be the same, but they might be slightly different. So if you don't get me what I need or what the processor needs, that will slow it down, and that you actually are potentially risk earnest money. because that time period could run out, or we might have to ask for an extension, and maybe the seller wouldn't be as lenient on that as we would hope.
Right. So tell me a little bit about the appraisal. What do you usually see as far, I get a lot of questions of pricing. I know this can vary, but is there anything you can share about that?
Sure. Well, let me explain the difference between, sometimes people think of an appraisal inspection as a regular home inspection. So a home inspection, this is the way I like to explain it, is a home inspection. If you were going to buy a used car, you'd probably let your mechanic check it out. Like say if it was a used car from maybe not a dealership, but maybe just a person, you'd want to get that checked out by your mechanic, and you'd pay your mechanic to do that. So when you're buying a home, it's a good idea to have a home inspection, and that's something that is not part of the numbers that I calculate. That's something that Paulina will work with you and work with a trusted home inspection person. That way they can tell you things that potentially could be wrong with the home. Correct. Then next would be an appraisal inspection. So an appraisal inspection is where an appraiser goes out, walks through the home, and then compares it to different homes in the area that have sold most recently and are within there's a similar type, similar bedrooms and bathrooms, and similar in the character and the building material it's made of, etc. So that usually happens once you pay for your appraisal. That usually happens within a week to 10 days, where we have the appraised value back. And that way, as long as it comes in at least at contract price or higher, we're still moving forward. If it doesn't, then that's when your realtor, Paulina, will renegotiate the price of that home. If it doesn't come in at contract price and the sellers aren't willing to come down, then you actually have an option to pay that difference in cash if you'd like to.
Correct.
And the cost of the appraisals, if it's an FHA loan, it's going to be $550. It's $450 to the appraiser, and we have to use an appraisal management company. Laws changed a long time ago where we can't talk to appraisers, and so that an extra $100 goes to the appraisal management company, and they manage the appraisers. They make sure they're going to get those appraisers back on time. If it's a conventional loan, then that would be $500, $400 for the appraiser and $100 for the appraisal management company.
That's great. I'm so glad you mentioned that, because very often I get that question, can I pick who goes and sees the house? I'm like, no, we actually don't even know till that day when that person calls the seller and, they coordinate that they're going to go see the house in the next couple of days. So, and then the appraiser, is he in the area? How does that work? Because some people's like, how is someone from, I don't know, if from a different city far away from where we are looking at the house is gonna appraise our house? So what can you think about that?
So we have a panel of approved appraisers for certain areas. Now, while we aren't allowed to choose which appraiser does that actual appraisal, we do have an approved panel for certain areas. So in Atlanta, for instance, if you take like Decatur is a very different area, and one side of Decatur may be very different than the other side of Decatur. And so, that's why it's very important. If it's somewhere up in, say, Cartersville, mm-hmm. we don't want to take someone from South Atlanta, have an appraiser from South Atlanta, appraise something up in Cartersville. They're two very different areas. So like I said, within each particular area, there's a set of approved appraisers. And while we can't choose them, we know we're getting an appraiser that knows that area.
Correct. And then also this, just to share more information, I feel the more information, the better. The inspection of the house, I always tell people to plan for 4 hours, but what about the appraiser, which is normally way faster than, the 4 hours? What do you usually see on their time?
That's something that we're not aware of. They don't tell us how long it takes them. I would guess no more than 2 hours, but it could be less than that. Honestly, I don't know.
Okay. Normally what I've heard from my clients is that it's way faster than the inspection. Normally they go take some pictures, measure, make sure, the description is accurate to what, they've been told. So yes. Okay.
Well, and they also do a lot of research on their own, because they can pull up the county records to see That home is obviously sold before, unless it's new construction. If it's new construction, they're actually going to look at the builder's plans and figure out square footage. So that's something they do a lot of research on even before they go to the home or right after they go to the home.
Correct. Okay. And now we have all of that. Are there any other steps that we need to follow prior to that closing date?
Yes. So once I get the file ready, and I try to front load the file as much as possible so that when it gets to the processor, they're really just reviewing everything that I've put in the file, and they don't have to ask too much back from the borrowers. Once it goes to processing, they look it over, and then the processor will submit it to the underwriter. It's usually in underwriting no more than 3 days. Underwriters are quite busy right now, and they actually are on a time schedule. They have to have that file back out right now within 3 days. As we get busier this summer, it might be 4 days, but usually they're very quick, and our underwriters do work nights and weekends. We've seen approvals come through on Sundays. So, if they get backlogged, they're going to work on the weekend to make sure they get these files out in a timely manner. When a file goes in, we have the dates in our system, and it's a countdown. So I can look at a file at any time and know, hey, this file needs to come out today. And if somebody else isn't on top of it, I am. But I usually don't have to even jump on top of it because we always meet our deadlines. Yeah. So then when the file comes out of underwriting, there might be something called you'll get a notification about a conditional approval. That means that you're financially approved, but there might be some conditions. Sometimes those conditions are on the borrower side, and it might be something as simple as, okay, we need to see proof that the earnest money deposit check, that it was deposited and it came out of your bank account. It might be something as simple as, we need an updated bank statement because your bank statement pulled, say, on the 14th of the month, and you've gotten paid again since then, so we need to prove that you have those funds. But those are very simple things. A lot of times the conditional approval is things on our end, like we're waiting for the title to come back, we're waiting to get your homeowner's insurance, and things like that. So usually it's quite simple when it comes out of conditional underwriting. Or it comes out of underwriting conditionally approved.
Wonderful. Wonderful. So basically, and then we have that 3 days prior to closing where the attorney, when the attorney shares with you, okay, what's that, final document? What can we see in that document, that breakdown?
Yes. So that's called your closing disclosure. Now, a few years back, I think it was 2015, the government really got into our business and said we have to get something called a closing disclosure out 3 days prior to closing. Now, sometimes the attorneys haven't even looked at the file. Our closers will work very closely with the pre-closer at the attorney's office, and they will calculate those numbers. There are a lot of things that are done at the last few days. So the closing disclosure has to go out at least 3 days prior to closing for the borrower to see it. Oftentimes we're getting it out sooner than that. It's very important that you watch for this, and as soon as it comes out, go ahead and e-sign it. It doesn't mean that that's the final number because the attorney is still gathering taxes and prorating them according to the seller, some to the seller, some to the buyer. So it's very important that you look at those, know that that's not your final number yet. As we work on it with the closing attorneys, pre-closer, we'll finalize those numbers, and then we'll let you know what that number is because you'll need to wire your funds to the attorney. Which brings me to another point. Always, always pick up the phone and call the attorney to verify the account numbers. There's a lot of mortgage fraud going on right now where somebody can hack into intercept an attorney's email to you, but it's all done very securely now. But it's very important, regardless of how it's sent to you, that you call that attorney's office. Google their number, look it up, or get it from Paulina, because you want to make sure that your money is being wired safely. Now, if it's under $5,000 in the state of Georgia, you can likely bring certified funds, but you want to check that out with the attorney as well. If it's over $5,000, it is required for you to wire it unless the attorney tells you otherwise. There's a few attorneys that have special insurance where maybe if it's $7,000, you could just bring certified funds. Once you pass that, usually the day before, you can wire your funds. It usually takes anywhere from 15 minutes, 2 hours for a wire to go through. What I always advise my clients to do is once they've sent the wire, I will call the attorney's office a few hours later or maybe even the morning of, just to be sure. And if you have a document from the bank, sometimes you have to actually go to the bank to process that wire. Go ahead and bring those documents to your closing. That way, if there's any discrepancy, you've got that paper. Now, if you happen to wire too much, then you'll actually get a check back at your closing for the difference. And if you're short a little bit, you'll need to bring a check with you. You may not know you're short until you get to the closing, and these days a lot of people don't carry checks, but what you can do is go to your bank, and they will actually usually print out, it's a sheet of 3, and they'll give you what they call counter checks. And that way you'll have, if you have to write a check for $60, at least you've got a check with you, because the attorneys won't take cash and you can't do Venmo. So you definitely need to have a check.
That's so true. That's great. And usually, your agent and you have been in all my closings were there to, help you and explain a couple of steps that, and obviously the attorney will be there, but a couple of steps that, might not make a lot of sense, but, you're signing a lot of documents. And basically that day you get to you get, most of the time you get to meet the seller and you get your key and everything that you need to open your new house. So that's awesome. Thank you so much, Cheryl. Is there anything else you would like to share?
Well, there's a lot of paperwork that you're going to sign along the way, and a lot of people, especially people that are a little bit older, they want a paper copy, right? You're going to get a paper copy at the closing table. Now, I've only seen this a couple of times where the attorney will actually hand you a thumb drive with all your documents on it. So if you want to print them out, you can. But just know that as we send your disclosures, there's always an option to print them or save them as a PDF so that you can look through them. So I would say those, don't worry about it as you go through the process. You're not committed to the loan till you actually get to the closing table and sign on the dotted line. But you are welcome to ask as many questions to the attorney or myself as you'd like, because that's what we're here to do, is help you understand what you're going through, especially as a first-time home buyer. It is really nerve-wracking, and this is probably one of the biggest purchases you'll ever make in your life, or it is the biggest purchase likely, unless you're going out to buy a yacht.
Right. Right. That's wonderful. Well, thank you again so much, Cheryl. I really, really appreciate it.
It's always a pleasure to work with you, Paulina.
Thank you. Thank you. And I'm very excited because we have one more call and we have a very, very special topic, which is like what the do's and don'ts when you are working on getting a loan, correct?
Do's and don'ts and frequently asked questions.
I love it. I'm very excited. So I'm always going to encourage you to leave any questions that you might have in the comments below for all the people that are watching this video. And also, again, we will be linking the last video so you can have all that information ready. Well, thank you so much. I hope you have a great day and take care.
Thanks. You too. Bye now.
Bye.